My name is Wei Jen. I'm here to present Genscape's Natural Gas Winter Outlook. If you have any questions, please type in the question box on GoToMeeting. Just so that everyone knows, we'll be sending out the slides after the webinar. Thanks for joining us today. Before we get into our slides, I want to briefly cover Genscape's gas offering. We have the Analyst product, which is a web-based data warehouse. We have our Spring Rock production forecast in gas, oil, and NGLs, all price-driven production forecasts. And there's also our storage S&D report that provides weekly forecasts of storage numbers and each of the supply and demand components. We also have the basis reports, and this will be the S&D for 16 different regions in North America, as well as a database of maintenances and notices. Please don't hesitate to reach out to us if you have any interest in trialing new products. Before we get into the details, let's get a quick overview on where we see the risks are for this winter. On the bearish side, our Spring Rock production forecast team is projecting production continue to increase, mostly due to momentums from Marcellus and South Texas. Canaport LNG terminal is quite full as we speak right now, and although price spread between Europe and Algonquin City Gate make economical sense for certain contract months, we remain skeptical of actual deliveries because we don't know enough about the existing commitment Trinidadian and Qatari cargoes have with Europe. Alberta demand are expected to grow with oil sand processing. Whether this increase in demand can digest all the excess gas that are not flowing into the U.S., we'll see. On the bullish side, freeze-offs. Freeze-offs have yet to occur on a big scale in Marcellus, and thus most operators don't have preventative measures. This could be an issue if the temperatures stay below 10 degrees Fahrenheit for more than 12 hours in a row. On a national level, we saw freeze-offs peak yesterday at 1.5 BCF a day, and freeze-offs have already occurred in Alberta in November. So this will remain a weather-driven risk. And industrial demand might be strong due to recovery. As macro environment and manufacturing activities continue to recover, industrial demand may be strong. Genscape's weather forecast is seeing a very cold January, and that could translate to an additional 110 BCF in demand. So these are the bearish and bullish risks that we'll see at play this winter. Let's take a look at the production forecast for this winter. We're seeing most increases in production concentrating in Marcellus and South Texas. Most of the growth in Pennsylvania will come from existing wells. If you look at production figures in the past 2 months, you'll see that Marcellus Shale Reservoir has been acting almost like a storage field, with extra production being pulled from wells as northeast demand increase. Winter demand certainly gives room for Marcellus production to grow. Another big increase is coming from South Texas, where we're seeing a lot of rigs continue to pop up in liquid-rich areas. How about the decrease in production? As expected, the slowdown in rig activities are mostly in East Texas and Gulf Coast with dry gas. We saw a slump in production in October with maintenance that was immediately followed by infrastructure coming online and thus increased Marcellus takeaway capacity. We saw production increase by 1 BCF per day in the first 2 weeks of November. We're expecting production definitely continue to increase in the coming year. Well then, how and when can we see production growth slow down? In our view, to see production slow down through associate gas, we will need oil prices to continue to drop. And even so, the lag time to impact gas production would take about 9 months. We see production growth for Marcellus for 2014 to be strong and steady, and we believe that the Utica Shale would continue to grow production for the foreseeable future. So, what are the downside risks? One, we have seen a producer shifting focus due to regional prices. And two, Marcellus deferred well counts are starting to decline. However, for us to see actual production decline in Marcellus, we need to see the 12-month strip to drop below $3 per Mcf. I'd like to show our forecast for rig counts before we wrap up the production side of our forecast. By the end of this winter, we see rig counts to be just under 400. Such a small decline will not impact gas production level, especially when oil prices are still above $85 per barrel. Okay, so let's jump to the demand side. On the demand side, this is a graph from our Generation Fuel Monitor report that compares gas-fired generation with coal-fired generation. Gas burn increased in the past 2 weeks with colder weather, and we're projecting slight low growth this winter, and with colder November, that brings our winter-on-winter demand increase to be around 0.2 BCF a day. Our next demand component, the residential and commercial demand. This is a graph of Genscape's weather forecast for peak winter months. We're seeing a colder weather, and that would translate to an additional 110 BCF of demand. Industrial demand certainly has a heating component that will be affected by weather also. But for the base component of industrial demand, we're expecting it to be flat winter on winter. For Mexican exports, we expect the flows to remain unchanged from last winter. We are seeing additional power plants that are scheduled to come online this winter, and that may increase about 200 MCF a day in demand. Canadian imports. To a certain extent, Canadian imports is weather dependent as well. This is a chart of year-on-year comparison of Canadian imports from our weekly supply and demand report. We're expecting Canadian imports to increase year-on-year just because the flows were so suppressed last winter. TransCanada has discounted the tariff rate to incentivize gas flowing eastward to Midwest, and we're seeing shippers subscribing to Great Lakes again. So that's a good sign, but subscriptions don't necessarily mean flows. And the uncertainty here still remains to be how cold this winter will be and how TransCanada will handle its IT bid floor this winter. A small portion of Canadian imports is from Canaport LNG terminal. Using Genscape's analyst tool, our database on LNG shipments, we're able to derive an inventory level at Canaport LNG terminal. As of today, there's still about 7 BCF of gas in storage. We received a full load from Qatar by McCain's on November 12th. Our algorithm right now is expecting no other inbound vessels at this moment, and we are hosting a webinar on global LNG in the next quarter. Please contact our salespeople if you're interested in receiving more information on our LNG product. So we have covered production, demand. Here, let's take a quick look at the regional level. So these are graphs from Genscape's gas basis report. In the basis market, the biggest trend now is how Gulf flow to the northeast has declined, thanks to Marcellus production growth. The M3 Henry Hub spread has oftentimes turned negative ever since June this year. First, on Transco's flow into Appalachia. We saw about 1 BCF per day of decline year-on-year this summer. Flow in the past month have increased whenever weather is cold in the northeast and with the demand spikes. It is as if Gulf gas is acting as a marginal supply unit to the northeast. TETCO. The TETCO system has effectively split into 2 segments at the northern border of Kentucky. Flows from the southeast and mid-Atlantic to Appalachia has remained close to zero in the past 4 months. Another pipeline that has shown similar phenomenon is Tennessee Gas. TGP has been backhauling at Station 200 in the past 2 months, especially since TGP's Northeast upgrade project came online and the Marcellus pooling project being completed. These two projects have allowed more Marcellus production to leave Pennsylvania and end up pushing Gulf gas imports down south. So to wrap up, let's take an overview of where we see the winter supply and demand components are. We see that production continued to increase while rig counts decreased slightly. Canadian imports increased with Trans-Canada discounting mainline tariff, but dependent on weather in the demand regions. Mexican exports will remain unchanged with no infrastructure expansion, but with the new power plants coming online, that could potentially add about 200 MCF in demand. And demand from power plants increased slightly due to load increase. Industrial demand will remain unchanged as increase in manufacturing activities offset the decline due to gas price rebound. We see residential and commercial weather-adjusted demand remain the same. And our weather forecast with cold January could potentially increase demand by 110 BCF. And we continue to see Marcellus production growth with infrastructure expansion continue to displace producing regions' exports into the Northeast. To conclude, our end of winter balance right now is at 1.8 TCF with normal weather and at 1.7 with our colder weather forecast. Now, I would like to open up the Q&A session, and you can type the questions in the chat section, please. First question, regarding Pennsylvania's gas production in 2014, how much do we see corresponding with new pipeline capacity versus existing pipeline capacity reversals? I'm going to ask Jonathan, who is our Spring Rock production analyst, to answer this question.
On the new capacity, a large part of the production gain is in fact due to new infrastructure projects to move the gas out of the region. The reversal of the pipelines, not so much. A little bit of the backing up of gas on various pipes, but of the, I think it's roughly over 3 BCF of year-over-year change. I'd say probably around half of that could be new infrastructure related.
And a question on what is the time period for our regional production growth chart that we showed. It was a winter-on-winter change. This is our winter-on-winter production forecast change driven by our Spring Rock production forecast. Okay, I think that's all we have for today. Thanks for joining us. Please take a few minutes to fill out our survey, as this will help us to improve the quality of our webinar. We really appreciate it. Have a good day.